is Raman Gill. Welcome to episode 10 of the 10,000 Trades Show. This show is all about mastering trading and creating excellence through deliberate practice and analysis of 10,000 trades. In this episode, we will take a look at a breakout strategy. Last time we looked at a range-bound market. Now, what happens when the price breaks out of this range and moves up or down? This is exactly what this strategy is meant to do. We'll look at where do we enter this trade, where our stop loss needs to go, and how do we exit this trade with profits. So let's move on to the charts now.
Here we have Euro US dollar daily chart. We have this top line here, which marks the top of the range, and we have the bottom line here, which is our support line that marks the bottom of the range here. So the price has been fluctuating between the top line, the resistance here, which is at 1.1480, and the bottom here, which is 1.1114. So price has been going back and forth. Every time price gets towards the top, it bounces off and comes down. Every time price gets to the bottom of the range, it bounces up and goes up towards the top of the range. So this is called our range bound trading. So once the price breaks out, how do we then trade that? And that's what we are looking at today in this breakout trade example. So once the price breaks through the bottom of the range with momentum here, what we're looking for is price to close below the range, because sometimes price could come down and then push back in, so we could get faked out. We want to make sure we don't get faked out, so we are going to look for confirmation. So in this case, first of all, we decide or we figure out what our range is. So we mark the top of the range, which is our resistance, and then we mark the bottom of the range, which is our support level. Once the price closes below the range and then stays below the range, that's when we are looking to take a trade according to this strategy. So once the price closes down here and we get a nice solid red candle, we are looking to go short in this example now. So I normally like to wait for 50% pullback on the trade. So I would enter my trade right here, which is 50% pullback on this candle. We just want to make sure that the price is staying below the range and not going back into the range here. We enter the trade here and then we wait for the price to pull down now, since we are in a short trade. And as you can see, over the next few days, price trails down lower here. We do see this green candle here. However, it is not an engulfing candle, so it doesn't really take out this big momentum candle to the downside. So we stay in our trade and we keep on going till we get this candle here. So as you look at this candle, you can see it takes out all these candles on the left hand side. So that would be criteria for us to get out of the trade, even though we see that the price has gone lower here. But when we are on the top right hand edge of our trade, our chart here, we would not know what happens next. So we would look at this trade setup here, this nice engulfing candle, and at that point the price could then start moving upwards. Hence, we will get out of the trade. So in this example, between the top and between the entry and exit here, we have about 327 pips. So the profit in this trade would be 327 pips, or if you're trading one standard lot, you're looking at $3,270. So just to recap real quick, the first thing to establish is the range that the price is trading in. In this case, we mark our resistance line, which will be the top of the range, and our support line, which will be the bottom of the range. And then we wait for the price to break out of the range. And this could be towards the upside or the downside. In this case, price breaks down out of the range in the bottom here, giving us a short entry. So we wait for price to stay below the range because we don't want to get faked out. And then we wait for 50% pullback here and we can enter a short trade. Our stop loss goes above the previous candle. We just want to make sure we give it enough room for the trade to breathe, and then we take a trade short and we stay with the trade till we get an indication that the trend may come to an end. In this case, the first indication that we get here is this bullish engulfing candle, and that's when we get out of the trade, because after this point we would not know what's going to happen next. And as you can see, later on price started moving up. So and from entry to exit we have 327 pips, which would net us $3,270 if you're trading one standard lot. Hope you enjoyed this trade.
I hope you enjoyed that trade setup. If you like this video, please feel free to share it with your friends. And don't forget to subscribe so that you get the latest episode for the show. Thank you so much for joining me today, and I look forward to seeing you on the next episode.